morning, everyone. Sabah al-Khair. It's a very special privilege for us to be here in Morocco, the city of Marrakesh, for the second day of this exciting regional sustainable finance roundtable for Africa and the Middle East. It's the first time this event takes place in Morocco, and I work at Bank of Africa, which has been a long-standing partner of UNFI. In fact, a member since 2000, the first African signatory. So this long-standing relationship and the place that the partnerships we've yielded with UNFI are important for us. And today we take a step back from being a commercial bank and looking at how we operate in the regulatory environment. This is an exciting time for the region, despite a very hard pushback, I would say, and the very difficult geopolitical realities. It's very clear that the momentum is still moving. There are still many exciting developments across the continent, and we'll be hearing about different perspectives today from Kenya, from Egypt, and from Morocco, and also from a colleague from, well, actually, let me call up our esteemed panelists. Walid, he's Sustainability General Manager at the Central Bank of Egypt. Yasser, Director of Issuers at the Moroccan Capital Market Authority, BMCE. Tiriongo, Director at Research and Policy at the KBA, Kenya Bankers Association. And last but not least, Burge, Policy Manager at the Climate Bonds Initiative. I think it would feel less formal and better to sit down with the panel, right? We were in a round, yes. Hello. Okay. So, as I mentioned earlier, this is a very exciting time for the region, and we don't use this term lightly. There's many countries on the continent that are developing their own sustainable finance taxonomies. We'll be talking about those a little bit. There's many adoptions of disclosures. Increasingly, the ISSB is being considered in a number of jurisdictions across the continent. The Network for Greening Financial Systems, NGFS, of which Bank of Walid is a member, but also over 30 central banks are a member of this network. And it shows really that at least, like I said, despite the geopolitical hardships we face as sustainability peers and advocates, that there's still a momentum, there's a silent movement that's growing. Sustainability is material and real for financial institutions and for regulators. So the objective of our panel today is to look at how public policy enables the mobilization of private capital towards sustainability. We'll be learning today about how that impacts banks and the financial system in general, and we'll be learning about cases from the continent. So without much further ado, let's start with Egypt. Egypt has one of the largest economies in the region. The Egyptian Central Bank is very active, especially in the recent years, and we were talking, Walid, about how, in my last 12 years at Bank of Africa, over the last 5 years, I've noticed a lot of colleagues from Egypt, different banks, the central bank. There's now an office of UNFI in Cairo. So can you please tell us a little bit about how the central bank kind of has pushed an enabling environment and any insights you can share with us?
Thank you, thank you, UNFI, for the invitation and the panelists. Well, there are several reasons why the topic is picking up in Egypt, and it's not only the central bank. As you were mentioning, we are one of the largest economies in the continent, and we have 36 banks operating in Egypt. A number of them, they have a mandate from their regional and the home office about sustainable finance in general. Some of the banks realized earlier that this is the right path to take. They realized the risks involved, and so they started to take an action. And the rest came from the top-bottom approach from the Central Bank of Egypt. Well, the we are trying to promote within our banking sector that we are business enablers. Yes, we are regulated, but we realize that it's not going to be like a regulator and a bank relation. We need to make sure that the banks understands the CDE mandate shouldn't be only a regulatory framework. Also, we have a vision that the pace or the topic won't be moving fast unless we have a different approach. We are all bankers, or most of us, and the banks are banks, and bankers will remain bankers, as I always say. So we need to make it, we need to make a business case. We need to start educating the banks that you still can go for sustainable financing while you're still making good profits. We needed to open the eyes about the opportunities of good banking and new market share to be added by going sustainability. Also, our regulatory framework that we issued in the last 3 years made it much easier for us, or paved the way for you, Amal, to see more Egyptian banks. So it became a mandate by the Central Bank of Egypt to the Egyptian banks. We started with our guiding principles to pave the way. It was not mandatory. Then we followed up with educational papers, and then during COP27 in Sharm el-Sheikh, we launched our first binding cases. We can go in depth on that. Thank you.
Very interesting. Thank you very much, Walid. And definitely, as I mentioned, the current geopolitical environment we are all facing in our daily work, it's very important to stick to the business case and really optimize our efforts. Thank you very much. So, Yasser, Morocco has a long track record of, in terms of sustainable finance, both on the regulatory side with Banque Maghreb and la BMCE, and on the banking side, like Bank of Africa, that has pioneered some products over the past couple of years. Can you tell us a bit about what kind of regulatory steps la BMCE is taking, and also what impact do you expect from all your efforts?
Well, thank you, Amal. Thank you for all the participants. Indeed, sustainable finance has been a strategic priority for the BMCE and for the financial sector as a whole, particularly since 2016. And we collaborated with the central bank and the insurance regulator, the Ministry of Finance, to develop a series of initiatives enabling easier financing for sustainability-related projects, as well as enhancing the transparency on ESG factors, its impacts, risks, and opportunities related to these aspects. We took a progressive approach. Small but impactful steps. We used a mix of regulatory tools at our disposal. Beyond regulations, we issued a lot of market guidance. We organized a lot of initiatives to raise awareness of market participants and build their capacity. So these efforts led to significant achievement on the capital markets. So up to now, we have had 8 successful issuance of sustainability-themed bonds, totaling more than $700 million equivalent. Each one with its own set of innovative features. The central bank also recently issued regulations to encourage or lay the ground for the integration of ESG aspects in the banking sector. But before going deeper in get involved in this sustainability business, because after all, financial sector is about financing businesses whose main purpose is to create financial wealth. Capital markets are about fulfilling two main roles: facilitating capital allocation for investors and lowering the cost of capital for businesses. And regulators are there to keep a fair and orderly market that can fulfill this role. So we can ask the question, where is the link with sustainability? The fact is that ESG or sustainability issues has become a core component of business relationships for various reasons: regulatory pressure, moral considerations, or other explanations. But we all agree on the fact that investors have integrated ESG, are increasingly integrating ESG aspects or requirements to inform their decisions, and it has become a key determinant of capital allocation and capital pricing. So we cannot stay out of this trend, and we had to take it into consideration in our regulatory action. For sure, we have some frameworks, for example, about material information that we could suppose are covering all these ESG aspects, but we clearly see that it's not enough, because the ESG or sustainability related issues are very intricate, very complex relationships. So we should put in place frameworks that would enable the parties the participants of the capital market to convey the right information that is relevant for investment decisions, and in standardized format to allow all the players to make their trade-offs.
Perfect. Thank you, Yasser. Just for now, I think the Capital Market Authority of Morocco has done incredible efforts to build capacity for the sector. Your latest event on ESG reporting really kind of helps to create traction to create this enabling environment. So for the publicly listed companies, they have this guidance they are following through AMC, which has helped streamline ESG reporting. And the second is during 2016, since you mentioned COP22, all the issuance and all the guidance around green bonds. So we have good memories of that. Thank you, Yasser, for AMC. Moving to another part of the African continent, to Kenya, Samuel. Good morning again. First of all, I must say congratulations, because Kenya on April 4th launched its Sustainable Finance Taxonomy. So it's great to have you here with us to tell us, first of all, how do you expect, what's the impact from this new taxonomy? And perhaps, as I mentioned, the times are tough today. What kind of challenges do you see with its implementation?
Thank you, Amal, for this opportunity again to speak in this forum. It's always a great pleasure to bring the experiences from Kenya. The launch of the taxonomy on the 4th of April is actually just a combination of efforts that had been put together from last year, because the Central Bank published a draft taxonomy last year. And as an industry, we came together, we trained bankers on the draft to provide solid and comprehensive comments on the draft. draft was aligned to the European taxonomy, and our interest at the time was to make sure that at least to a great extent there is a domestication of the taxonomy to the realities of the country. So we have a working group for sustainable finance that has been in existence for more than 10 years at the Kenya Bankers Association. It's convening of about 13 top banks. And whenever there is an initiative, particularly coming from the regulatory front or even a global standard, we would quickly come together, deliberate on the impacts on the banking sector, give feedback where necessary, and of course engage the stakeholders, the critical stakeholders here. This would be now the Central Bank of Kenya and any other authority, like for instance the Nairobi Securities Exchange, the Capital Markets Authority, on the same. And that working relation has been very fruitful because that has helped a lot in us conveying our views about the impact of any standard emerging. And when the taxonomy now was published, of course, there was a lot of anticipation on the side of the regulator, particularly to get feedback from the industry. And we did give feedback on the same, most of which has actually gone into the draft that has now been published. It was again agreed that upon the publication of the taxonomy, any challenges that would arise out of the implementation of the same taxonomy, we have a window again to reach out to the central bank and have a conversation on the same. Because it's not cast on stone. It's a document that is alive, that the central bank and ourselves are really ready to re-engage and possibly even align where there are pain points, for instance, because the taxonomy is for the industry, and it is not an imposition of a standard that is way up there that cannot meet our expectations, because at the end of the day, we're looking for a document that will guide the industry through the lens of realities of the same economy, particularly to align assets, whether they are green or not green, looking at what is sitting within the portfolios of the industry. So all the regulatory developments that are coming, I think we've had a very cordial relationship with the regulator, and we really hope that we continue doing the same because it's for the industry. If we look at other emerging regulatory fronts, central bank, the national government actually also just about a week or two ago also published its second NDCs. Announcing to the global arena that we are very committed as a country towards reducing emissions. And I think this was a very bold step. We are now targeting to reduce emissions by 35% by 2035. That's 10 years from now. It's a very bold move. And if you look at what this requires, it's about $56 billion US. That's exactly about the portfolio of the entire banking sector in Kenya in the next 10 years. So the banks would be sitting squarely at channeling financial resources to green investments. And of course the taxonomy comes in to shape and give confidence to the industry that within this transition period, within the commitments that the country has made, we are going to have the confidence that the portfolios that we actually are mapping out would be aligned to a global standard in terms of the definitions of what is green and what is not green. So as mentioned yesterday, the central bank also published a climate risk disclosure framework. Again, we were very keen to train the industry through the detail of this climate risk disclosure framework. Because for us, we look at it as an opportunity for training, but at the same time also an understanding of a standard that is emerging. And now that this is also aligned to the IFRS S2 standard and Basel principles, we thought that it's good to kind of kill two birds using the same stone. So you're training, but at the same time having an appreciation of what is emerging in the global space on the same field. So on the regulatory front, I think we have taken an approach that is working for us, which is engage re-engage where necessary, and always open discussions. Nothing is closed until it is closed. So we're happy to continue doing the same.
Very, I like the tone of positivism, but also realism, which is kind of the undersetting theme of the day. And again, from our various experiences in sustainable finance, at Bank of Africa, we had to travel to various countries, and it was incredibly fascinating to exchange with colleagues from the Kenya Bankers Association. Already back in 2015, 16, 17, 18, the KBA actually, for the banking sector in Kenya, did a kind of championship. So you'd have these ESG champions from various banks, and I was proud to see our subsidiary, Bank of Africa Kenya, kind of be a leading pace car for the whole group, where you would think sometimes other countries would be leading the way. We found champions in Kenya. So really great case. And as you said, the more training we need, all the better. We'll get back a bit more about the taxonomy. So just to recalibrate where we are this morning, we've heard from three different perspectives: a major economy in Africa, Egypt. We've heard from Morocco, setting the tone with the solid basic foundations, regulatory side and banking. And we've heard about Kenya kind of leading also the way in the taxonomies. I would like to turn now to the Climate Bonds Initiative, Lily Burge. I know you're very active in the region. I wanted to know what kind of trends, now that we kind of saw the regulatory perspective, what trends do you see in the region that would help us kind of complete the picture?
Sure, thank you. I think one of the key trends we've learned a lot about has been the taxonomy. I mean, the uptake of green taxonomies in the region, I think, is really impressive. And I think many African regulators are going about it the right way. They're seeing the taxonomy as a really important tool to enable investment. And so, like you just mentioned, the Kenyan taxonomy, they're following the EU taxonomy to ensure alignment with international standards, to ensure access to that international investment, because that's a really crucial piece that a taxonomy can give us. It can enable any project development to be speaking the same language as big international investors who we know are desperate for sustainable investment opportunities. The massive subscription we see for green bonds is testament to that. And so I think the approach to taxonomy is crucial, but then also the approach after, like you mentioned, sort of what next, once you've got your taxonomy in place. And we're seeing several countries where there's really clear action on enabling the sort of policy environment to follow the taxonomy. So we're currently working with Rwanda, where we help develop a taxonomy along with GIZ, and we're helping them to develop the sort of policy regime, to align the policy regime with the definitions of the green taxonomy. Because once you start enabling and once you start aligning your fiscal policy, your definitions of green within public financing, everything, it sort of streamlines the process. It enables sovereign green bond issuance, it enables incentives to be aligned with green, which then can automatically start ensuring that sustainable finance projects within the region are meeting that same standard. And I think one of the other key trends would be sort of issuance. I can't talk about green bonds. And it's really interesting in the region is that, so globally, the green bond market is dominated by corporates, banks and non-financial corporates. In the region, it's dominated by sovereign issuance. So there's clearly massive room for growth of corporate, green, social sustainability, sustainability bonds. So there's real room for growth, and I think again, going back to taxonomy, the building out of taxonomies, the breadth of taxonomies, which Amal was talking about yesterday, enabling as many people to access those definitions is really crucial. So I think we're definitely seeing that with the starting resilience definitions. The Rwanda taxonomy we helped develop allocation resilience criteria. This is the first taxonomy in the world really to have really developed allocation resilience criteria within it. Having that sort of breadth of taxonomy really help us to access as much sustainable finance as possible, particularly for resilience, which I think is particularly crucial in the region.
So excellent, excuse me, excellent. That kind of confirms how we started this panel, which is that there's a growing momentum despite the very real hardships happening on the political and economic scene globally. I would love to ask a few more questions from our panelists, but I was thinking I would also give a chance for the audience to ask any questions. And before I do so, Lily, about what you said about taxonomies, what's clear today is I think there's 30 or more, or 100, I heard 100 last week. There's 100 plus taxonomies of sustainable finance being created across the world. Clearly, the point is not for everyone to do their own thing. The point is to converge at some point, especially in regions. But I think what the underlying challenge is this tension between the global standards on which we can all agree on and these all too real local realities. You know how nature today is taking place. Before it's been climate. First it was ESG risk, and then it was opportunities, and then it became climate, and then after COVID it became nature. So now we're here, we're in nature, and we have to take back the conversation. So again, bankers will be bankers, right? So to not lose the bankers, we need to be as real as possible. But we found with our peers that nature actually is more realistic of a term, because the real threat to Africa today, it doesn't really come from the climate or nature, it comes from survivability. So as long as people can survive and think about their livelihoods, and since nature is a huge part of the GDP of the continent, there has to be a way to streamline all of this. We look forward to reading more about the Kenyan taxonomy. Bank of Africa is part of a working group with the AFDB that's also working on an African taxonomy, so I want to see it to be continued. Maybe we'll have with the AME, with their colleagues from Egypt and the CBI to kind of meet in 6 months and check notes and compare, just see how do we compare across regions. Does anybody have any pressing questions, observations, comments, disagreements about what you've heard today? Please go ahead.
Walid from UM60, Capital Markets Program. I have a question for Mr. Mounsif. We've talked about the 8 green bonds that we had in Morocco. If you look historically, most of them were before COVID, including the ones from BMCE among Africa. How do you explain, it seems like we're losing momentum in terms of issuance of green bonds. How do you explain that? And from the perspective of the regulator, what steps do you intend to take to put the machine back into work? Thank you.
Well, it's true that there was a momentum that was created by the COP22 that was held in Morocco in 2016, which was a key milestone and that encouraged the market participants to heighten their interest in sustainability aspects. And since then, the first issuances were carried out, including by Bank of Africa. We saw successive issuances, and then, especially with the COVID crisis, then businesses started to take care of more pressing matters, let's say. But we had a few issuances after the crisis, including 2 billion dirham issuance by ONCF this year. But I agree with you. We would all love to have more transactions, and this is why we gathered again with the other regulators and actors of the financial market, so BMCE, central bank, and insurance regulators, as well as the Ministry of Finance. We did an assessment of the achievements that we accomplished since 2016 on various aspects, and we elaborated a new strategy to start the second phase of the with the objective of supporting the achievement of the national engagement of the MDC. So in last October we have published the National Climate Finance Strategy for the Horizon 2030, and it includes a comprehensive set of measures that we can classify in three main blocks. The first one is to facilitate or to satisfy the immediate pipeline of economically viable projects and facilitate the underlying diagnosis for this strategy concluded to the fact that we have a fairly complete set of financial solutions, but the idea is to facilitate putting these solutions to the benefit of economically viable projects. The second layer or the second axis of this strategy is to address less viable projects like adaptation projects where tremendous amounts are needed to meet the engagement. And the idea here is to introduce and encourage new innovative solutions like risk-sharing mechanisms or blended finance solutions to enhance their financial viability and their ability to attract private investment. And the third layer of the strategy is to put in place enablers that will support the ongoing development of this positive dynamics through various measures, fiscal incentives, labeling of green investments, and of course a core aspect of these enablers is to develop a taxonomy that we are already working on. The taxonomy would, as a first step, deal with green projects or climate-related projects. It will seek to strike a good balance between international alignment, but as well as channel flows towards national priorities and engagement. And we are pretty confident that we will accomplish the desired outcomes with the involvement of all the ecosystem and stakeholders.
Thank you. I have a question for Mr. Ali. We met 5 years ago during an e-meeting on the report for provision policy to bring the financial system. And I would like you to give us, because you achieved a lot since that time, and I would like you to share, if you could share with us how did you interact with your ecosystem, not only the bankers, but also government parties, other industries, and also the other sector, because like sustainability is a transversal, it's even a meta framework for society, and it requires coordination at all levels. We see, for example, like the environmental department or ministry, how do you work with these people as banker, as a central banker, and what advice would you have, since Morocco is designing its own taxonomy as we talk? How can we get most of your experience on that topic, and how do you work with that? Thank you.
Thank you very much for that question, and it's a pleasure to meet again. Well, we we also realized that we cannot do it alone as central bankers. The topic of sustainability and sustainable finance involves other technical, if we're talking about the climate or the environmental side, other technical side that most probably we have no clue about. So we integrated in our regulatory framework environmental experts to jump in and teach us as bankers the impact of the projects that the banks are financing when it comes to environmental impact and climate change impact as well, under the umbrella of the environmental side. In our regulatory framework, for example, we mandated banks for any projects that exceeded the financing of 20 million Egyptian pounds. There must be an environmental expert accredited from the Ministry of Environment to evaluate the project and submit a report to the accredited committee about the impact of the project. That's well and good. But we wanted with this action to embed the scientific side of the project within our accredited decision. This is something that we already put it in place. Also, we realized that we cannot still work alone as a central bank. Yesterday, I was very happy about stressing the point of collaborating with academia, because now we are confidently say that the sustainable finance module is part of our credit risk programs and credit course within our Egyptian Banking Institute in Egypt, which is the trading arm of the Central Bank of Egypt. So collaboration with all those stakeholders, especially on the technical side, we get benefit from. Also, we are working on having a sustainability academy. There are already specific degrees on sustainable finance within a number of Egyptian universities. So we are trying to grab the graduates from those universities to inject them within the banking sector. So if we are not having the exact knowledge as bankers about how to evaluate the projects from an environmental perspective, for example, or even the social impact. So let's bring the experts, the people who got degrees and educated about the topic, to merge the expertise within the banking sector. Not just to speak long, also about the mention about the taxonomy that Morocco is working on. I don't know if I'm in a position to give advices to my colleagues about the mother, really having great knowledge. But from our point of view, issuing a taxonomy, which is a great tool, cannot be a solo project that we decided as a central bank to issue a taxonomy. We need to look on what the regulatory framework that we issued already, and what's the outcome of the gap analysis that we received from our regulations issued previously, and then analyze all of this to decide how our taxonomy will look like. Again, as I always say, they know that the room is full of taxonomy experts, so I'm trying to transfer my point of view. It's not, again, a tick box that we issued the taxonomy. And I was talking yesterday with my dear colleagues in IFC, Louise, that it's not about, the goal is not issuing a taxonomy. We need to design something that really fits the market and really impactful. So and should be, as my colleague from Kenya said, should be a live document, can be revisited all the time to make sure that it's the right way. Lastly, we found at the Central Bank of Egypt that conducting surveys and conducting gap analysis is crucial for us. We don't move any small step without knowing where the market stands. Because in all the gap analysis we conducted, we were quite surprised with all the results. We were quite surprised that all our banks in Egypt are doing sustainable finance efforts without knowing if it's labeled or can be categorized as sustainable, because they don't have the knowledge for that. So that's quite important. Also, the gap analysis informs the future regulations, and I really believe that there is no one size fits all, like you heard it yesterday several times. You need, as a regulator, to have a research arm to analyze what's going on in the world. We need to know what's happening with the taxonomies, the huge number you mentioned of issued taxonomies. Personally, I'm inspired by the taxonomy of Mongolia, the Asian as well, Rwanda. So we need to read more. We need to go outside the traditional banking operation that we used to know. So having a research team or an arm to advise you about what's going on, because you might find a very similar situation that yours that can be implemented. I don't know if that covers your question, but I would love to elaborate more maybe after the session.
Okay, thank you. I don't know if you can see me. Maybe I should just start that. Good morning, everyone. I'm Gabi from Bank of Africa, but I'm not asking this question as Gabi from Bank of Africa, but as an African. My question is not really directed to anyone in particular, it is not for everyone. And it's related to Africa dependency regarding external capital and how we can all tap in our domestic resources. For example, yesterday, excuse me if I'm pronouncing his name, I'm not pronouncing where his name is, I think it is Malud, the first special envoy. During his intervention, he said something that will be important, that is Africa countries' rating profile. He said even though we change this profile, investors will still do Africa regardless of the way they want to do Africa. Like they will not consider the enhanced Africa rating profile. So for Africa to really earn, also there was a saying that we only receive a small portion of criminal financing. So it is true to say all these things, but another question should be, shouldn't we be asking ourselves how to tap in our domestic resources? And it is important for Kenya to issue a taxonomy, but the reality is an investor from the US will not accept to do Kenya taxonomy. He will come with his own criteria and say, I know you have your taxonomy, but me as an investor from the US, this is what I'm referring to. And excuse me, but I don't care if you have a taxonomy. He will come with his own criteria and try to, and Kenya will have to only comply. So the question is, how do we, I don't know, maybe there can be some regulations framework, or how can we more tap in our domestic resource to reduce our dependence on external capital?
Thank you very much, Gabi, for that question. So how can we tap into domestic resources? Remember, the objective of our panel was how can public policy mobilize capital, so it's kind of linked to your subject, to your question. Perhaps we can take one more question from the floor because we have about 5-6 minutes. And then I was told that there might be questions online. Perhaps there are none, but if there are, now would be a good time to share them. Would anybody else like to ask a final? Yes, please go ahead. For parity, maybe we should take them. I know we're in the midst of anti-DEI, but I think it's very important to be balanced.
Hi. I want to follow on, I think that question around how we mobilize local investors is critical. And so I actually have a question, but a bit of background to that is in South Africa, the first segment of the financial sector that was interested in the green finance taxonomy was the pension funds. They got very excited about it. And the reason they got excited is they're the only ones regulated in the financial sector in South Africa to apply sustainability screening. They have to consider ESG when they do their asset allocation. So they were struggling on how to implement it. So they wanted proxy to know that they were compliant and that they were allocating to impact. I think the point about international investors using international taxonomies, it also applies to IFC. We use the MDB, Common Principles for Climate Mitigation and Adaptation Finance Tracking, which is a bit annoying to the local regulators in South Africa who are saying, well, we've got this taxonomy, why are you not helping us use it? So there's nothing preventing us from using local taxonomies. We just start with what we're familiar with. And if we use a local taxonomy, it would need to be credible. So the process would need to be credible. It needs to be backed by policy. I think the CBI comment was correct. There has to be a policy signal. There has to be some sort of regulatory backup saying that the government endorses this taxonomy. But I do think even if we were using international taxonomies and trying to go the global route, the national needs would still come up. And the investors that are really interested in a market would want to know what are the priority areas to invest. So it would grow. The national focus would grow. I think it would be inevitable. And banks would want to expand into additional categories that are locally relevant. So my question is, I'd love to hear it articulated by the panelists. Are we right in thinking that the local taxonomy criteria are important? Are we right in thinking that, and why is it important?
Perfect. I thought that was a very clear question. I almost want to jump on it. Yes, it's very important locally. Very mindful of the time. I think we're going to wrap it up here with the questions. If you'd like to tackle some of them in 1 minute, challenge of the day, and I will provide feedback based on what I've heard to take us forward. Yasser, would you like to give a shot?
Very briefly, I would join what was said by Louise and Gabby. Mobilizing local or domestic savings and domestic financial flows is crucial and essential. And I think we cannot say that Africa is dependent on foreign investments because, as you mentioned, it attracts a very negligible amount of foreign financial flows dedicated to sustainability. So there is huge opportunity and requirement to mobilize local domestic investments, and to do so we should provide frameworks that align with local circumstances and include the national priorities of each country. It does not prevent us from using international taxonomies when we are going to raise funds in international markets, because sustainability or not, you have to satisfy the requirements of capital providers, whatever they are. So having a local taxonomy will mobilize us and help us all go know where we are going, what are the choices that we have made, and it does not prevent us from also working with international taxonomies when circumstances require this. And I think both can cohabitate peacefully.
Thank you, Yasser. Very clear. Walid, would you like to give it a shot?
Yeah, just we have 52 seconds. Well, I think it's answering Louise's question. In my humble opinion, it's about the balance. We cannot really go to the extreme with the local taxonomy, or to the extreme to EU, for example, taxonomy that really cannot fit in our markets. For example, when we issued our first regulatory framework, we did it from a local market point of view, but we asked IFC to look at our regulatory framework to tell us with their experts, is this aligned with the international practices? Is this looks good? Is there any amendments? And we get the feedback from IFC before issuing our regulatory framework. And we really don't want to take the credit of everything we issue. We have partners that help us do so, and IFC one of them. So what I'm trying to say, that yes, we can still go local, but we need to be aligned with the international standards. And I'm sure that investors would understand that there is a local context that needs to be taken care of.
Absolutely. I'm thinking of, this is a very big parallel with the basic Charter for Universal Human Rights. Of course, each country has its common practices, but we should have a universal sustainability charter. UNFI actually helping us light the way. Thank you very much to our esteemed panelists for the very, very valuable insights. A great example of cross-border collaboration that we need to keep this momentum growing. Again, we started off by talking about the very tough geopolitical context, and we will end not because we want to bring down the energy, but to say it's important. The good news is that sustainability is stubborn. It still matters. People are still happening. Taxonomies are. We can't even have enough resources to keep up with all the major trends and advancements. So it's thanks to these collaborations, and everything we've heard today has been very interesting. Today's panel with the regulators also is a good example of the carrot and stick approach. Across the continent, we see different ways of how the public policies are helping to mobilize capital. Of course, there are always limits, but there's definitely a way forward. And last but not least, I would say capacity building. Really, I think all the regulators today are focusing heavily on that. But it's the capacity building 4.0. It's no longer about taking hours and courses and major degrees and PhDs. It's really about understanding local context, testing, being agile. So thank you very much for your patience. We have 30 seconds. That I would still like to say that at Bank of Africa, we are one of the leading institutions regionally, but we are not alone, and we are happy to no longer be the only bank. Although oftentimes we are one of the only banks in working groups, and that's good news again for the momentum, and it gives some hope that sustainability continue being part of the boardroom discussions at the end of the day. Thank you so much for your attention. Thank you, Eric Usher, for having this event in Morocco, and